If you were an existing customer of State Bank of India whose home loan was linked to the marginal cost of fund-based lending rate or MCLR, you probably wouldn't have preferred to shift your loan to the new benchmark. There is a high probability that the interest rate on your home loan was cheaper than what the bank was offering to the new customer. But this has changed since the new year. Now let's say you took a home loan a year back in January 2019. SBI's interest rate varies depending on the loan amount. If you had taken a loan up to Rs 30 lakh, for example, your current interest rate would be around 8.1%. The new rate for home loans up to 30 lakh, which is the same category, now stands at 7.95%. There is a similar difference of 10 to 20 basis points for home loans ranging between 30 and 75 lakh and those which are above 75 lakh. I am Dinesh Bhasin from Mint's personal finance team, and in this new episode of Why Not Mint Money, we will discuss why you should shift your home loan to the new benchmark. For years, RBI has been pushing banks to lower their interest rate soon after RBI cut its policy rates. The central bank wants interest rates to rise and fall based on the policy decisions. Banks, however, took time to reduce lending rates whenever RBI would cut its policy rate. On the other hand, they were fast to hike rates when RBI would increase its policy rate. To make the transmission quicker, RBI had implemented different benchmarks, such as the base rate and then the MCLR. But both these benchmarks were controlled by the banks, and therefore none of these yielded results that the RBI wanted. In October last year, RBI said that all loans given to retail segment and to micro, small and medium enterprises would be linked to an external benchmark. Shifting to external benchmark means banks couldn't control it anymore. Most public sector banks chose RBI's repo rate as their external benchmark. Repo rate is the rate at which RBI lends money to the banks, and it is in control of RBI and decided by RBI. Shifting the benchmark to external rate is expected to bring in transparency. Earlier, banks calculated their internal rates, so a customer had no way to know whether the rates would rise or fall after central bank changed the policy rates. Now when the repo rate is cut or hiked, customers' home loan move in tandem. According to RBI's notification, all new retail loans that are floating in nature should be linked to the external benchmark. However, if you are an old customer, it won't come to you automatically. You need to apply to the bank and ask them to shift you to the new benchmark. Lower interest rates are just one incentive. Loans linked to the external benchmark are also transparent. And there's more. When RBI mandated banks to move to the external benchmark for retail loans, they also standardized many aspects of it, unlike the MCLR. In the MCLR regime, bank had the option to choose when do they want to reset the rate. So there were some customers who saw their home loan get reset every quarter, but there are some others who see their home loan get reset every year. In case of an external benchmark, banks need to reset the rates at least once in 3 months. As a customer, it's easier for you to know when will your rates reduce or go up. They will be in tandem with the external benchmark, which is the repo rate for most loans. Earlier, borrowers had no way of knowing this. RBI has even said that if an existing customer wants to shift to the new benchmark, banks will not levy a penalty. However, banks can charge a reasonable administration or legal fee. While we believe that customers should shift to the new external benchmark regime, let us also remind you that this is only for banks. So if you have a home loan from a housing finance company or an NBFC, this wouldn't apply on you. Housing finance companies and NBFCs have their own benchmark. So if you are an NBFC customer, there is a good chance that your existing loan would be priced higher than what they are offering to a new customer. So if you want transparency of rate, you can shift your loan to a bank instead of continuing with an NBFC. But the key here is that you must act. According to Janak Raj committee set up by the RBI to review the MCLR, 30% of borrowers didn't move to MCLR even after 15 months of its implementation. They continue to be on base rate. So don't procrastinate. Even a small saving on your home loan can go a long way. That's all from this episode of Why Not Mint Money. Thank you for tuning in.